What's going on, guys? So today I kind of wanted to go over some tips that I found helpful over the time I've been trading. I day trade options. This is something that is a quick way to make money, but it's also a quick way to lose a lot of money. So you have to be very mindful about how you're handling this. So I kind of wanted to go over some tips I've got for to help you stop losing trades. And so that first thing I'm gonna go over is don't let a green trade go red. Okay, I've seen too many times to where you're up and you just sit and you hope and you pray that it's gonna keep going, and the next thing you know, you're break even to what you just paid for the contract, and then you're red, and then you start second guessing yourself. Oh, it's gonna go back. It's gonna go back. Whatever. Your trade starts going red. You need to just get on out. Okay, that's why stop losses are super important, and that's why managing your trade and your risk uh, is should be the top of your priority, not just dollar signs. Um, we need to be happy with our strategy. A lot of times people their strategy doesn't work one day. You've back tested for months and it works 8 out of 10 times or 7 out of 10 times, right? That's a winning strategy. But then you have 2, 3 bad days in a row, maybe 4 bad days in a row, and you immediately start Googling or YouTubing for new strategies. No, you need to master your strategy. You need to stick with it, and you need to study it. Find points that aren't working. Work on those things to figure out what's wrong with it. Why is it not working these days? Now, I mean, the best thing you can do is literally recap your day every single day. As soon as you're done trading for the day, shut it down, whatever. But you need to open it back up that evening, that afternoon, whenever you got some time, and review before your next trading session for sure. This is going to help you really identify maybe something you missed. Maybe it was, FOMC and you didn't check the calendar, so you didn't know, right? And you'll remember that for next time, right? Maybe there was some news that dropped, or maybe, something was going on that you just weren't aware of, or maybe you just overstayed your welcome. But either way, you need to go through and recap your day. That way you can stay on top of it. Along with that, is don't get greedy, right? We don't need to, make $1 million our first day or our first week of trading. If you're starting with a small account, think small, right? If you're only trading with $100, you don't need to think that you're going to make $100 every day. You don't need to really think that you're going to make $50 every day. You need to go in with the mindset of making a certain percentage of that money that you're happy with, that's obtainable. And obtainable is the key there, right? You don't want to hope for, the moon and it doesn't happen. All right, so we need to be realistic with it. And don't overtrade. I've been down before, and you buy a contract, at 75 cents, right? 80 cents, whatever it might be. Then also next thing you know, it went up 10 cents or whatever, and then now it's back to what you paid, and now it's traded at 50 cents. And you're like, uh-oh, I didn't sell, but I'm here now. What do I do? And so you start psychologically trying to, you know, uh, negotiate with yourself what to do. And so you start, having these wild thoughts like, well, I'm just going to see if it goes back, or I'm going to go ahead and buy another contract. I'm going to double down or triple down. That's the worst thing you can do. If you're wrong, you're wrong. Just be wrong. Don't try and argue with the market. Don't try and say that you're right. Sometimes it just doesn't work. For whatever reason, it just isn't your day. So don't overtrade, right? Don't ever double down. Don't ever triple down. Okay. When you're wrong, you're wrong. Just walk away. And again, have those recaps at the end of the day. Kind of, go through those things and study and figure out where you went wrong. All right. So what's something we can do to kind of accommodate for this? So I came up with something that's kind of what I would call like a baseball strategy. This is the best thing I could come to kind of relate to stocks as far as how to have the mindset, right? So base hit, right? This should be your daily goal, okay? Um, this is, and again, this is just examples, right? A base hit being a 25 cent to 30 cent move on your contract, right? This is per contract, right? You may want to lower that to be 15 to 20 cent as your base hit, daily goal, right? And if you just get in the mindset of, you think of your favorite baseball player, they don't step up to the plate and hit home runs, right? They don't step up to the plate and hit these grand slams, right? So now this isn't set in stone what I've got right here on the screen. This is just an example, right? You sit down and you come up with something that you know is obtainable every day, right? You may need to lower this, right? Again, this is just an example because all this depends on what kind of contracts are you buying. If you're buying contracts that are way out the money, that are 0 days to expiration, these probably none of these are going to hit, right? But if you're buying right at the money, right in the money, and right outside the money, these are obtainable goals, right? Especially if you're buying 1 to 2 days to expiration contracts. Now, again, the reason why I have this kind of related to baseball is because you don't want to you don't want to get ejected from the game, right? So this is trying to help you stay in the game, right? You're not always gonna do good, right? You're not always gonna get a home run or a grand slam, right? And so again, that's what I'm saying. Just think of a base hit as like your daily goal. Like I'm happy if I make $20 or $15 or 30, whatever per contract, and I know that that's obtainable with my strategy. That's where back testing comes in, right? That's where I've sat through here and I've tried this and I've tried that and I've researched this and I've researched that, and I know that whenever this strategy works, it moves in this type of way, and then from there you can relate it to options contracts, right? What are you looking for gains there? Okay, setting your stop loss. This is I don't think there's anything better that you can teach somebody than to set your stop loss. You can always move up your stop loss as your option contract goes up in price. So, for example, you're in a contract that was 75 cents. You want to make that 25 cent. Next thing you know, it's worth $1.15. Well, move that stop loss up. Move it up to $1, right? Move it up to Not only did you get 25 points, it's still going, right? You could still get more for the day. Maybe you raise it up to $1.10, and who cares if you stop out at $1.10 or $1? You still got your daily goal, right? You can always move these, right? Especially when using platforms like Webull, they make it super simple to adjust for these things. And it's going to prevent you from getting too greedy and moving a limit order to an unrealistic price. So if you're only using a limit order to sell, well, it's kind of hard to guess where it's going to go to a certain degree, right? Unless you're really good with math and figuring out what the what the option contract is going to be worth whenever the stock hits a certain price. Sometimes you can get a little too much, right? I paid 75 cents for this contract, and I'm gonna sell it when it's $1.80. Well, it may not make that dollar move, right? That's a lot of points. So, I would advise using, instead of a limit sell order, maybe just a stop loss, right? And let's just say you set it for, a good rule of thumb I like to have is if you want to make 20, then you need to be willing to lose 20, not lose 30, right? You want to have it so that, I can get 20, but I'm willing to lose 20 to try and get that 20, all right? And what that's going to do is it's going to keep you from, in a contract, next thing you know, you're down $100 or down $200. No, you got your stop loss set to 20 points, so the most you lose is 20 points per contract, right? Some people have it even tighter than that, right? They want 20 points, and they're going to have a 10-point stop loss, right? That way they're risking for the 20 points, they're risking to lose 10 to try and get that 20. Right? That makes sense, right? You're limiting yourself on how much can you lose on that day, because trust me, when it's not working, it's not working, and it's just not your day. Don't force it. Just don't, right? It's going to cause you more heartache than it's worth. So here I've got an example. This is an options contract on Webull. This is from today. And the next, I might have to bounce back and forth 22 slides to kind of show it. But this kind of gives a movement, right? The stock opened up at, let me pull it up on my other screen here today. This is QQQ, of course. We open up at 510. Now, this is a 517 call, same day expiration. At open, you can see we open up at 64 cents what this 517 contract's worth, right? And that's $6 in the money. Like that's, or out of the money, I'm sorry. So that's pretty far up there, but it's fairly cheap for a contract, right? And look at it. It runs all the way on up somewhere close to, you might as well say $1.50, right? In that first 5-minute candle, because it was on a 5-minute time frame here. That's a pretty big move. Now the stock went from, let's see, 510 on up to about 513. And I'll go ahead and just roll it over here for you. So you can see we went from about 510 all the way on up to about 514, right? So if you're looking at this options contract and you got in somewhere at the bottom and you're looking for 20 points, I mean, you would have made it quick, right? And even if you drug your stop loss, let's just say for the just for the trade here, what we got right in front of us, we know it opened at 64. Let's just say you wanted to sell at 84. So you got your stop loss down here. Let's just say 44. Okay, willing to make 20, or willing to lose 20 to make 20. Okay, next thing you know, boom, we hit that 84 and we kept going. There's 94, right? You need to start dragging that stop loss up, right? And some people may say, well, how do I know where to drag it to? Well, you want it to trail just a little bit behind. But once you've hit your goal for the day, you probably need to have it really tight to whatever that goal is. So 20 points, right? So go ahead and drop it to 84. Okay, it's 10 points off where you're at, but you're still going to hit your daily goal. Next thing you know, it's $1.04, right? Well, bring that puppy on up to 94, right? Or to $1.14. You see what I'm saying? So we're trailing it by 10 points, right? We were only going for 20, but now we're up 40, 50. You see what I'm saying? If you had rode that thing all the way up to 150, trailing by 10, you'd have sold it 140, right? And then it actually went a little over 150. So if you was on top of it, maybe you got 142. Okay, you paid 64 for this thing. That's a massive move in the contracts world. And you're not always going to see this one open, so don't get the idea of, buy it open as soon as you're able to buy a contract. Don't do that. But this kind of gives you an idea of a 0 day to expiration contract. This is what you've got to expect. Okay. And as you can see, if you would have held on to it, it would have went back up to 150. But then look, we dropped right back to what we paid for it, right? And, this is probably, I'm going to guess with the 5-minute candles here, somewhere around 10:30, right? And right here, according to Webull, I was about 10:50, 10:55 when we came back up and we hit $2, right? Imagine if you had held it from there, that would have been, an hour and a half hold, but I mean, goodness, you would have made quite a bit of money. However, when we start getting into that mindset of, man, I could have made $2.05 on that contract, and I brought it from 64 cents. When we get into that mindset, we expect that every single day we're in the market, especially when you miss a move like this. But you know what? We don't care. You know why? Because we've got our daily goal in mind. We only want 20 points. You know why? The long game. That's why. Okay? The longer we can survive in the stock market, the better. Because you don't want to put all your marbles in at once and then you lose them all. Now you got to start over again, right? Well, if you saved up all that money, now it's gone, right? I actually took a screenshot and put it in the slideshow of what happened today, right? And today was, it was a strange day. We had a lot of AI stuff come out this morning. We know it's earnings week. There's a lot of things going on. We gapped down, right? We gapped down, we closed Friday. Let's see, we closed Friday at about 528-ish, 528.50. And we opened up at 511, right? We were down quite a bit today. So, down 15 points or whatever. And that was off of just close, right? We were even lower at open. So, we were down at one point almost 20 points on the day. So, obviously, depending on what strategy you're looking at, you could have had different, swing trade maybe or day trade, right? I just day trade, right? That's what I do. I look for certain indicators as to get in, and I try and follow the trend to a certain extent and then get out. But you always want to get out on the move up. You never want to be stuck in the move hoping it comes back. Because I'm telling you, if you would have sat there today and you would have thought, man, look, we're making higher lows, right? And then, we went up again. And then if you would have had that mindset of we're going to hit 520, right, that pre-market high we see here at 519.40, I think you see it never updated, right? We never got even above, I'd say, 518.50. somewhere around in there, right? So you just would have been wishful thinking. And not only that, time decay, right? You got to factor that in all of this, right? When we are looking at 0 days to expiration contracts, we're literally a ticking time bomb, so to speak, right? Because the closer we get to here, the closer we get to 4 p.m. Eastern, the less that thing's worth. And if you can see, let me go back to that previous slide. As you can see, that thing started dwindling off fast, right? Even though the we were 512, whatever, the chances of it hitting 517, whatever the break even was for this contract, is very slim to none, right? And that's what this whole thing's about. However, if you had looked at, you know, an expiration for tomorrow for 517, I'm gonna pull that up real quick, just to kind of show you the difference. Okay, let me pull them over here. Right? So this is what we're looking at here. It looks very similar to the slide I just had up, right? But obviously we're dealing with more money, right? It opened at 139, it ran up to 278, right? That's great. That's crazy moves. I mean, so you can see real plain as day why you don't necessarily want to pin yourself against the wall with a 0-day contract expiration. And you can trade them. I don't want to sit here and act like you can't trade them. You can. However, you need to be very careful and cautious with them because it's gonna. I mean, your contract. I mean, time's gonna eat those contracts alive, right? You don't have any time on your side. So if you buy something that expires tomorrow or the next day or maybe a week or two out, well, now you got time on your hands. So if you need to hold it overnight or maybe hold it for a few days, you've got time on your side. You don't necessarily have to sell it for a loss. We need to just stop trying to shoot for the moon every single trade session we're involved in. We need to set these daily goals. We need to make it be something that's obtainable, right? Let me go back to my baseball analogy here, right? We really need to come up with a chart, something like this. I'm not saying it has to be exact, but something like this, right? Set yourself up. You can take this. I don't care. You can take this right here, what I've got, and then modify the points. Do whatever you want with it. But try and have this mindset of, man, this is my goal, right? This is what I want to hit every day. And man, if I get this, man, that's like hitting a double or a triple or a home run, right? And then you can be like, man, today was a great day, man. I knocked it straight out the park, right? And those are the good days, right? But they're not every day, right? You may not even hit your base hit that day. You might hit a foul ball. You might strike out, right? That's where stop losses come in. And so I hope these tips were helpful. If you guys got any questions, let me know. This was kind of just something I put together that I try to get myself in the right mental state so that I'm not over trading, so that I'm not losing my account over, being arrogant and thinking that I know better than what the market's showing me. That's why we got to trade with the chart. We create these biases, and that's fine. But when you're wrong, and you need something to let you know, hey, I was wrong, and get out. Just get out of the trade, live to trade another day, and that's how you make it in this game. All right? So again, if you guys got any questions, be sure to leave it in the comments. Be sure to like and subscribe if you like this video content, and we'll see you in the next one.